Hello and welcome to another video on my YouTube channel. My name is Joris and today I'm going to talk about 3 extra global dividend ETFs for European and Swiss investors. So currently I have 5 subscribers, so when you like this kind of content, please hit that subscribe button down below and hit that like button if you like. And with this being said, let's start with the presentation. So the global dividend ETFs from Europe, I talked about 9 in my previous video, but I forgot to include 3 other ones. So in total there are 12 global ETFs which distribute dividends, which are not swap based, because you know I don't like swap based ETFs. So 10 are buyable in Switzerland and 2 are not. The previous video I talked about SDGPX, GLDV, GLDVD, VHYL, TDIV, FLXX, GGRW, SDIV, QDVW, and in this video I'm going to talk about PSRW, FTWD, and as you know from the previous video, when it is marked violet, it's because you can't buy them on the SIX stock exchange in Switzerland, but you have to go to the German stock exchanges or the London stock exchanges. Most of the time they are buyable there. And the last one, it's VWRL. So for the first 9, check out the previous video if you want to, after completing this one. So the PSRW or PSWD, it's from Invesco and the name is FTSE REFI All World 3000 UCITS ETF. You can see the easing code and the total expense ratio. It's 0.39%, so that's right around the average of the previous video from the other 9 that I discussed. So the currency on the SIX stock exchange is US dollar, and momentarily it's around $23.46. The currency of the dividend is also in US dollar. I always like it when it is the same currency. The holdings. So this one has 1,159 companies where it invests its money into. Currently, the ETF is managing 42 million, and it's a sampling ETF, so it can be an advantage and a disadvantage. Maybe I will address this in a later video. But when it's sampling, then the owner of the ETF, so Invesco in this case, can have a bit more freedom in which stocks they are going to invest in. So they don't completely follow the FTSE REFI index, All World 3000 index. They can take a bit more freedom on it. So the performance, it's not that bad. So it's also positive in the past year. So there were only 3 from the previous 9 that I discussed in the previous video that had a positive return. So this is also slightly positive. And in the past 4 days, the stock market went down again. So it's not performing that badly. Also, over the past 3 and 5 years, it's around 40% up. And then since its inception in 2016, it's up 140% more or less. It distributes 4 dividends, so quarterly. in March, June, September, and December, and it has a dividend yield of 2.60%. And the dividend distributions, again, always in June, it's a bit higher, but the distributions are quite nice. Then the other funds of Invesco, it's the FTSE All World UCITS ETF distributing. It's the FTWD. It has a total expense ratio of only 0.15%, so that's really nice. The price momentarily on the GetX, so that's one from Germany. It's 4.94 euros, which is a really nice price. You know that I like it when ETFs have a really low price, so not up around 100, because then you need to invest immediately high amounts of money into it to be able to buy shares. The dividend currency is in euro as well, so once again, really nice that they have the same currency. It has 798 holdings where it invests its money into. It only has 6 million in funds, but I will get to that in a minute. And it's also a sampling ETF. So why it is, you see it here, 1 year, 3 years, 5 years. We don't know how it performed because it was only started on the 26th of June of this year. And since it started, it's up 2.8%, more or less. And it also distributes quarterly, so 4 times in a year, the same months, March, June, September, December. And the dividend yield for now, it's unknown. And it only gave a dividend in September for now, and that was 0.02 euros. I will get to that at the end of this video, why I think that is really interesting. Then we have the Vanguard funds, the last one of the three that I'm going to discuss today. So it's the FTSE All World UCITS ETF distributing. So it's more or less the same as the first of Invesco, the previous one of Invesco, because it follows the same index. It has a total expense ratio that is a bit higher than the one from Invesco. It's 0.22%. The currency on the SIX stock exchange is Swiss francs, and that's almost 100 Swiss francs. So yeah, when you want to buy a share on the SIX stock exchange, it's going to cost you around 107 francs because of the costs with the Swiss code. So keep that in mind. When you want to go for cheaper, go with interactive brokers or the Giro. They are cheaper than Swiss quotes, but you know that I go for certainty around my broker, so it's Swiss quote for us. The currency of the dividend is in US dollar, so you have a switch there from Swiss francs to US dollar. It invests in the most holdings up to now, so also with the previous 9 in the previous video, 3,677 companies where it's invested its money in, and it has the highest amount invested in it as well, so more than 9 billion Swiss francs is invested in this fund, so it's really important to know that. It's the biggest fund, all world fund where you can put your money into. It's also a sampling type of ETF, and when you look at it since its inception, it's up almost 250%. That's really nice. And the past year, it's up 25%. And that's because it invests its money also in the technology stocks from America. So it profited a lot from the last year rise of Apple, Microsoft and stuff, Nvidia as well. So that's the main difference with the other ones that hardly invest in those stocks. So that's really important that you know that. But I think that the Invesco fund will also do that because yeah, it's actually following the same index. But for now, the other fund only has 6 million invested in it, and this one almost 9 billion. So that's a quite big difference. It's also distributing quarterly dividends in the same months again as the previous two ETFs that I discussed already in this video, and it has a dividend yield of 1.8%. The distributions are also really nice. Again, the one in June is higher than the other three, but it has a rather nice distribution over the whole year, so a really nice ETF. But as you remember from the previous video, there we discussed the VHYL. So it is also a Vanguard fund, also from FTSE, but that one has more to focus on high dividend yield. So it only invests in the 1,763 companies, only 3 billion invested in it as well. And you can see again here over 1 year the performance down minus 0.23%, but the dividend yield is 3.66%. So that's a bit better than the previous fund, but also, yeah, since its inception 2013, the other one was 2014, up 240%. This one only up 51%. So it's always up to you which you like more, either the higher dividend yield or the higher total yield. So you have to keep in mind everything, of course. Also, whether or not you like the fact that you invest Swiss francs and receive US dollar in return for the dividends, that's also something you have to keep in your mind every time when you decide which ETF you think is the best for you. So I can't decide for you which ETF you have to start investing in. The thing that I can say is that SDGPX, for me and my wife, I think that one is still the best one to invest our money in. And then, of course, it's followed by all the other ETFs because they are all performing well. With the side note that the VWRL and the GGRW, that one you can go and check out in the previous video as well. But the VWRL had a return of 240% since 2014. And then you have GGRW. I don't know in what year it started, but that one was up 204%. So regarding total yield, those are the two best performing funds. And that one had a dividend yield of 1.8% as well. So yeah, it's what you prefer. So it's up to you to decide in which ETFs you want to allocate your money into and invest long term always. So don't invest money that you need on a short term. So at least think about a term of 5 years and preferably 10 years or longer. So that's really important. Yeah, I put it here again. So do your own research for sure. It's not financial advice. Which one is the worst global dividend ETF? Well, it's still SDIV. That one is a dividend trap for sure. So I hope it proves me wrong, but don't put your money in this fund until yeah, it can make a turnaround, but losing 32% in such a short time, that's not great. And then of course we have FTWD. It's still early because it's only here been around from the end of June, but it looks promising for compounding. So when you're an investor and you want to start compounding your dividends, then FTWD is an interesting one. And why is that? So when you look at VHYL and you look at the current price, and then of course this one it's a US dollar, so you have to take into account that a US dollar is 0.91 Swiss francs right now. And when you then calculate, so you divide the current price of the ETF and you divide it by the dividend that it distributed in September, you know that you need more or less 100, 110 stocks to receive enough dividends to reinvest the dividend to be able to buy one extra share. So you need roughly 5,500 Swiss francs invested in this ETF to be able to reinvest your received dividend completely to buy one extra share of the ETF. So 5,500 Swiss francs. And then on the other hand, you have FTWD. It distributed in September 0.02 euros. So when you look at the current price and you say more or less it's five francs, then you know that you need 125 shares of the stock, 250. I need to say 250 shares of the stock to receive more or less 5 euros in return as a dividend. And this means that with 250 stocks, that you need roughly 1,250 euros invested in this ETF to be able to reinvest your received dividend and buy one extra share of FTWD. So that's a huge difference, 5,500 compared to 1,250 euros. So that's why I always like when ETFs have a lower entry price. So yeah, the price actually it doesn't matter for the fund, but for you as a buyer, it's important to realize that yeah, it starts faster. Your compounding start faster, and compounding it's one of the biggest powers that there is in investing. So if you can start earlier, that's always a nice thing. But for now, yeah, we don't have a lot of information about this fund. Only 6 million invested in it. But as I said in my previous video, I don't think it is important because they have to start somewhere. And if I don't mention this fund at all, nobody knows about it. They're only going to see the Vanguard funds and put their money there. This fund has no chances then for receiving more money invested in it. And yeah, when most of the funds they need 500 around 500 million invested in it to be able to survive. And I think last year there was a fund where there was 110 million Swiss francs invested in it, and they stopped it, and they started another fund, and um, yeah, they threw together two funds that they had before, So they had higher funds in one new ETF that they created. So I think it's unfair from other creators to not mention these kind of funds. So yeah, I'm going to follow this one up for sure, and I think it's also one that I'm going to look into to make a calculation or maybe start a calculation with my spreadsheet so that you can follow along how this ETF is performing in the long run. So with that being said, I thank you for watching and see you next time. And yeah, thank you if you subscribe, and see you in the next video. Bye.